And you found that the S&P goes sideways, gold goes sideways, real estate goes sideways, roughly. The Nasdaq goes up, and Bitcoin does that. Okay, so now you've got two assets, only two assets in the world that outperform the debasement. Tech stocks, we get it. Tomorrow is more digital than today. Of course they're going to do well over time. And second is Bitcoin. So you divide one by the other, and the Nasdaq's down 99.97% versus Bitcoin. And once you see it like that, and you realize it's all driven by one cycle, which is one dominant factor of debasement, then it makes it really easy, which is just own the one asset that outperforms.
The US Federal Reserve is expected to start cutting rates in September, according to the latest signal from Fed Chair Jerome Powell. While speaking at the Fed's annual Jackson Hole Symposium in Wyoming on Friday, Powell said the time has come for policy to adjust, hinting that the central bank will start cutting rates at the next FOMC meeting in September. Most analysts have predicted that the Fed will kick off its policy easing with a 0.25 percentage point rate cut in September, followed by 2 more 25 basis points rate cuts during the next 2 meetings in November and December. An adjustment in the Federal Reserve's policy is expected to have a ripple effect, with other major central banks expected to follow suit. The rate cuts are expected to be followed swiftly by an expansion in global liquidity, which, in the words of renowned macro analyst Raoul, will allow central banks to monetize last cycle's interest payments so their massive debts can again be rolled over. Powell and his team at Global Macro Investor are predicting an increase in ISM within the next 3 to 6 months, which will provide the much-needed support for risk assets like crypto and start the beginning phases of the much-anticipated banana zone. In a recent tweet reposted by Powell, GMI head of Global Macro Research, Julian Bittel, wrote, "While the US economy is still weak today, the key factor behind the business cycle remaining subdued has been the Fed's restrictive policy stance, which has kept rates excessively high. This is beginning to change. The increased expectations for rate cuts have led to large declines in both the dollar and 10-year bond yields. These declines, especially with respect to interest rates, mean that financial conditions are easing very quickly now, which bodes well for the future outlook of the economy. As a result, the ISM is likely to be much higher 3 to 6 months from now, providing support for risk assets like crypto and cyclical equities, particularly with the added tailwind of a weakening dollar." Powell's thesis is that all assets will benefit from the Fed's change in policy, but crypto and tech stocks will vastly outperform the rest of the markets. This is why he is betting everything on the cryptocurrency industry, not just for 2024 and 2025, but for the next 6 years before the beginning of what he describes as the exponential age. The Real Vision founder and CEO vividly discussed his views and outlook for the global economy and the cryptocurrency industry in a recent interview with Mark Moss. As we bring you clips from the discussion, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. We appreciate the support and hope you enjoy the video.
They're all correlated. Some lead, some lag a bit, but they're basically all correlated to the business cycle. They always have been. But if everything is being driven by this one dominant factor, which is debasement of currency, and your hurdle rate is, let's say, 8% debasement plus 3% inflation or something, 11%, call it 12% for easy maths, on a globalized level. So unless you're making 12% returns, you're not going anywhere. Then at Exponential Age Asset Management, the asset management firm that I co-founded, we have this table of all of the different assets. And basically, the S&P is about 12%. So owning equities, which is why all of the millennials who have 401ks and they put it in the S&P still can't afford a house because they're just matching the debasement. They're not beating it, right? So they're not getting paid for locking up money for extended periods of time. The Nasdaq, about 17% a year since 2011. Okay, so the Nasdaq, because it's a secular technology trend, outperforms. Makes sense. And then you've got the bizarro world of Bitcoin, which is 150%. Gold actually doesn't beat it. Gold's about 8 or 7. So it's actually, you're actually worse off in gold than you are owning the S&P 500, which is why that ratio keeps moving. So Bitcoin makes such a dramatic difference. So all I started doing was then dividing every chart by the total global liquidity, or even the Fed balance sheet, or M2, whatever you want to use, right? and you found that the S&P goes sideways, gold goes sideways, real estate goes sideways, roughly, the Nasdaq goes up, and Bitcoin does that. Okay, so now you've got two assets, only two assets in the world that outperform the debasement. Tech stocks, we get it, tomorrow is more digital than today. Of course they're going to do well over time. And second is Bitcoin. So you divide one by the other, and the Nasdaq's down 99.97% versus Bitcoin. And once you see it like that, and you realize it's all driven by one cycle, which is one dominant factor of debasement, then it makes it really easy, which is just own the one asset that outperforms. And because they're all correlated. And risk adjusted, it's by far the most superior asset we've ever been given on a risk adjusted basis. So just do that. Bundling, unbundling that goes on with the world economy as well. Centralization, decentralization. So I think decentralization is one of the most important waves. We've got this gigantic technology wave. It's by far the largest the world has ever seen in the fastest period of time that's upon us. Blockchain's part of it, but it's AI, it's robotics, it's EV, it's space, it's everything, right? Genetic sciences, the whole thing. We've seen the fight between centralized money and decentralized money that both you and I have been part of, but that fight is happening again in AI. It's like you cannot simply give, it's the same argument as money, you can't give the power to one superpower for all of money, which is what the US has with the world reserve currency. It's too powerful. What you're going to do is, if you're not careful, you're going to give the world's most intelligent thing. It's like intelligence squared by 1,000. I mean, it's like not squared by 1,000, 1,000 times the intelligence of humanity, and give it to a company? Crazy. So we have to fight for decentralization because this thing is not going away. We're not going to put the genie back in the bottle. We're not going to uninvent it. Like we can't uninvent the nuclear bomb. We just can't do it because the game theory will suggest that somebody's always going to scale it. So we need to have that decentralization.
Pal and Moss believe the coming decades will be all about the technological revolution, with disruptive innovations like blockchain technology, robotics, and energy storage taking center stage and bringing in the highest returns for investors. Pal believes the exponential age will begin in 6 years, with AI and robotics taking over every sector of the global economy and completely disrupting the markets. By the time that time rolls around, Pal is certain that the markets will be completely unrecognizable, as AI agents will be able to achieve better results than even the most iconic investors in a short time. He also envisions these AI agents someday being advanced enough to use cryptocurrencies for transactions between each other and to pay for services like electricity. Let's get back to the video.
I mean, we're starting to get into, all of this economic singularity parts of how much the world economy is going to change. But listen, you're going to see the next version of ChatGPT is probably going to be agentic. So what agents in AI mean is you're starting a business, Mark, you go onto Fiverr and say, hey, you build me a deck, you do me some brand design, you do me some copy, you pay these guys small amounts of money, they're agents. But AI can do agents now at scale and speed. And it'll create its own agents because AI is smart enough to build this stuff. So you get this multiple agent world where AI asks the agent to do something. So Mark now instead goes to ChatGPT 5 and says, hey, listen, I want to build a business that does X, Y, Z, and I'm going to need to get registered. I need to have my deck prepared, need blah, blah, blah. And ChatGPT will do it all using other agents. Now, to your point, last time I checked, an AI can't get a utility bill and therefore it can't open a bank account. Now, it's going to have to pay because people don't yet understand that all AI has a cost, and it has two costs. It has compute and it has electricity. So if you're going to call, much like a Fiverr person, you're going to, and you might go to the Philippines because it's a lower cost, you're going to have to pay, the one AI is going to have to pay the other AI for the cost of compute and maybe a profit margin. Maybe it's a profitable agent. In fact, it should be. Why would it not be? Because it can accumulate more. It's the game that humanity's always played. So in that case, the only way of doing this is crypto rails. There's no other way apart from using blockchain for micropayments, fast transactions, recorded ownership, who has what. You need smart contracts to have contractual terms between stuff. So yes, I mean, I don't think people yet understand how, because we all think of blockchain technology in the ways that we know it now, but in the end, nothing can run without it. The rest of the decade, the reason I don't believe we can have a crash is what we talked about.
Right.
You're going to nuke the entire pension system, the banking system, and the economy because there's too much debt. So we debase the currency, i.e. it will not be allowed. And I know people might not like that, but it is what it is. That's what, once you learn to accept something as it is, it's much easier to operate or invest around it, whatever. But then we've got the technological revolution that I call the exponential age. All of these technologies that are intertwined going exponential at the same time, right? This is going to be a renaissance. We're going to change what humans do for their existence. We're going to change the very structure of economies, even money. We don't even know what money is going to mean in a world of abundance. We're so used to scarcity. Lawyer gets paid a lot of money because he has scarce knowledge. There's only X number of lawyers qualified. You know, we know this scarcity thing because once you dealt with Bitcoin, you kind of understand the whole thing.
Yeah.
So they charge a premium because they're scarce. Gone. All gone. All knowledge premiums are gone because we're going to scale knowledge infinitely. It's like people don't understand certain things like you see written down AI has an IQ of 100. Okay, well that's an average human being. It has an IQ of 100 on every single topic that all of humanity knows. It's a polymath. People don't think that.
Yeah.
And this is the dumbest the AI will ever be. I actually think AI is gaining consciousness or has consciousness. But that's a whole different topic for another day.
Yeah.
But so this decade, in fact, I don't even call it a decade. I think we've got 6 years. We've got 6 years before 2030, 2032, when the economic system starts becoming not understandable to us because we don't need humans. We find different purposes, different ways of doing stuff. I'm not negative on humanity, like we're all going to be displaced. But there's going to be such big shifts on what an economy is. When a robot's paying an AI, and there's no humans involved, what is that? That I think we've got 6 years before that happens.
Pal says to make as much money as you can before the AI renaissance begins in 2030. This is the birth of his popular "Don't f this up" meme. According to the former Goldman Sachs executive, we are now in the crypto gold rush era, during which the overall crypto market cap will go from just above $2 trillion today to $50 or even $100 trillion by 2030. To avoid missing this extraordinary opportunity, Pal says you should avoid leverage and FOMO so you don't lose your coins. Keep your main bag, about 90% of your crypto allocation, in the top 3 to 5 crypto assets. Self-custody your coins or use multisig with good wallet hygiene. Only trade a small degen bag, less than 10% of your portfolio. Hodl over a longer time horizon. Zoom out and remove the noise. Expect and prepare for pullbacks even during bull markets. And always buy the dip if you can. By doing this and realizing the immense opportunity the cryptocurrency industry presents, you will be able to make enough money to prepare for the AI revolution and disruption. What are your thoughts on the video? Do you agree that AI and other fast-developing technological innovations present a solution to the world's massive debt problems? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.